Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Abraham Lincoln, who said, "The best way to predict your future is to create it." So to help you create your future, Dale and I, in our upfront no BS approach to all things stock market, will share with you many lessons that, if followed, will see you create a better future for yourself. So sit back, relax and get ready for another great show. For our main topic tonight, we investigate how to find good stocks to trade in 3 easy steps. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening to you.
Good evening to you.
Can you believe it's Tuesday already?
I know, it's a
Come
sort of
around
flu.
quick.
I know, but then I had Friday off anyway. So
Did you?
Yeah, I went and bashed a few more balls around a golf course.
Oh, using sticks and balls again.
Sticks and balls again, yes. I went to a beautiful one over in Sandringham. Sandringham Golf Course or something. It's right next to Royal Melbourne.
Lovely.
They say you have to sell your soul to go into Royal Melbourne Golf Club or something and be invited there or something, I don't know. But
Oh, you might get an invite, you never know if somebody hears.
I know, but I played with 2 young fellas in their mid-20s, so I kept up with them, so that was all right.
Did you? In what sense?
I kept putting things in their wheels so they couldn't move very far. No,
That's great.
I got them on one hole.
Excellent.
But that was my win for the week. Considering I'm only just getting back into it anyway.
Yeah, that's right.
So that's pretty good. Well, anyway, but before we get into our first segment for tonight, again, we're going to take some live callers onto the show. Now, if you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. The number you need to dial is 03 9290 9988. That's 03 9290 9988. And to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know I'm super keen to chat to a few people because there's so many exciting things going on. So make sure you pick up your phone and get dialing now.
While we wait for you to call, it is the second Tuesday in the month, and this means that Dale and I will give you our thoughts on the sectors in the Australian stock market. So let's get into the charts.
Okay, well, on the screen is the sectors in the Australia.
Take it away.
No, my nose is really itchy and it's like distracting me, so that's fine. Okay, take it away. It's the yearly figures on the sectors in the Australian market.
Yeah,
Did I get that right?
Yep. Okay, so we've got energy.
You can take it away.
Energy is up around. Look, it's a nice return, isn't it? Remember when energy was down so strongly, and we said that it would be the top of the leaders board eventually. Well, I wonder how long it's going to stay there. It's doing well
if
so
you
far.
predict enough, eventually you're going to get it right, aren't you? But it's done really well this year, hasn't it?
It has, but I just want to quickly digress and skip right to the bottom of the chart. We can see there that minus 18.5% we've got Infotech. Now, what are you predicting for Infotech this year?
I think it'll do well this year. I think it'll come back. I think there'll be a few stocks that'll come back. I still think there's some other opportunities in our market, obviously in communication services and healthcare and things like that. So they're more the bottom ones, but I don't mind information technology. I think there's some good opportunities, but not broad right across the board. There's a few select ones.
Yeah, that's good. Okay, so the top 3 that we can see here, energy, utilities and materials. So there's a bit of a jump down to utilities, 17% up so far. Materials, 12% up, which is lovely. Now, I want to go back to the bottom. I'm doing this something different for a change. Hopefully it doesn't spin your head too much.
I'm hanging on. I'm staying with you at the moment.
Yep, hold on. Okay, so down the bottom, we've got consumer discretionary minus 15.6%. Now, I think, healthcare, consumer discretionary, information technology, they're the ones we've got to be watching, aren't they, from here?
Yeah, absolutely.
Okay, now I'm not too sure though about CSL in healthcare and what it's doing, because it's been threatening to push through that low.
Haven't they?
Really struggling. Sonic Healthcare looks interesting though. Consumer discretionary, I really am interested with this one. I think, with the threat of the cash rate being raised by the RBA, and then for interest rates going up, borrowers will be affected, therefore will people have as much purchasing power? And inflation's going up so much, but I don't know, people talk about this sort of thing a lot, but initially there's an impact on people's perceptions, but people get back to doing what they've been doing before.
Well, it's like everything. If things get too expensive, then people stop doing it or buying it or
Yeah, but
spending
what's
money
too
on it.
expensive and for who?
Well,
And
fuel was expensive, but obviously the excise coming down on that for a little bit has helped a little bit. It was really nice not having to take out a mortgage to fill the car up on the weekend. So I did like that. But I mean, energy costs at the moment are going up because coal's going up because of what's going on in Ukraine and Russia. Now Europe's buying more coal and trying to buy it up so they don't rely on Russia. So, you know, that's all going up. Electricity's going to go up.
they're building more and more houses. They need furniture. Harvey Norman, discretionary stocks.
Yeah, I love it.
You've got JB Hi-Fi. The young consumer, do you think they're driven by worrying about fuel prices and the like? I mean, who's shopping at JB Hi-Fi nowadays?
I don't know. Who
People
is?
are doing more online
I
shopping.
like it. It's one of my shops. I go to Bunnings and JB Hi-Fi.
They've got a good online shop.
They do. No, I'm talking about visiting.
Harvey Norman, you visit?
No, Bunnings.
Bunnings. I didn't
Bunnings.
mention Bunnings.
The boy toy store.
What planet are you on? Because I didn't even think about Bunnings at all.
I know, but it's still, every guy loves to go to Bunnings, not just to get the sausages.
Well, I must be sort of strange because I like going to Bunnings.
Well, no, you're not strange.
And I don't like to go there for the sausages. They're gross.
Can we get back to this? Okay.
All right. Sorry to the people who are working hard out there raising money. Buy more sausages at the Bunnings store,
And
okay, if you like them.
And do you have your onions on the top or the bottom?
All right. Okay, let's get back to this. Financials, okay, up 4%. Consumer staples up 0.33%. And then industrial. So right in the middle there, we've got consumer staples. What do you think about that?
Look, consumer staples is, I don't mind that sector, but it doesn't excite me as much as some of the other sectors at the moment. I'd like financials better than that.
Good long-term stocks.
Long-term stocks. They're brilliant long-term
plotters.
stocks, but I do like Wesfarmers. I think that should be a good one.
Yep.
Moving forward, I mean, Woolworths is always a good little performer as well. So there's, sorry, that's not in the consumer staples.
We've got industrials there.
Industrials is looking good there too. But what do you think are the best sectors moving in the next
communication
quarter?
services. What about Telstra?
Yeah, I love Telstra at the moment. I think it's long term. Short term has some weaknesses, but I think long term it looks good. Always have done for the last couple of years actually. So next quarter, what's this list going to look like? What's the top going to and the bottom going to look like?
Geez, you put me on the spot, and I don't look at it. Like to look further afield than that. But looking at the table here, I think that we're going to start to see some improvement in some of these bottom sectors. But we might see a little bit more downside first. That's what I'm just watching for at the moment because there's no clear sign yet.
All right, I'll go with you.
All right, that's it for our take on the Australian market sectors. Now it's time to get into our first email for the night.
Alrighty, our first email tonight is from Anna, who says, "Hi, darling Janine. Thanks for the live shows. I listen to your shows every week or week on a weekly basis. Just wondering what your thoughts on WEC. I bought it on the 19th of February at 0.019%. Just wondering what your thoughts on this. Should I sell this at a loss, hold it, or buy and reduce the average price? Thanks, regards, Anna." Wow.
Yeah. Now, I looked at this and I thought, oh, jeepers, she's a cowgirl, you would just say?
I'm glad you said jeepers. I said something, it's a four-letter word that's a bit more expressive.
Yeah, right. Well, I'm looking at the fact that it's now trading down here and it was trading all the way up here at 15 or 16 cents, still an illiquid stock by anyone's measure. However, why has it gapped down like that? That's the first thing I'd want to know before I made any decision. Is it just that they've done some sort of consolidation and the share price is yet to catch up with the adjustment on the chart?
Well, you think they would have done that by now? They would have factored the factor.
Oh, look, I have seen some really small stocks that have been stuck in limbo like that with a big gap on the chart because the notification to the ASX hasn't been given and it's taken a long time to get it.
My first guess, if I'd looked at that big bar going down there, this one here, I would have looked at that and go, okay, well, maybe it was a corporate action or something like that, like a consolidation or whatever it is, to cause such a huge drop. But I wouldn't have been in that stock anyway. This is like a CREP stock.
Yeah.
It's not even close to being something that I would have on my list. It's just, if you look at the liquidity on it, it's terrible.
Yeah, look at the bars.
It's not just bad, it's terrible for liquidity.
Now, if we just have a look closer up about what the stock's doing right now, it's just sideways. There's just no activity.
It's not a stock you want to be getting into. I mean, if it wasn't a corporate action, now what if that means she's in a big loss? Correct?
If it wasn't, no, well, she's bought down here right down low. So if we look at the price today, what is it, 17 cents? I think she bought at 19 cents.
Oh, yeah, so she's not losing too much.
Yeah, yeah.
It doesn't look like it's going to go down any further, does it, really?
Yeah.
But
so,
I don't know why she would have bought it. I really don't. But that's... so hold?
So I'd say, oh gosh, what else could you do? Just wait and see.
Yeah, that's what I reckon too.
And make sure you set a stop loss, I'd say as well. You're very brave, Anna.
I'm more braver than I am, I'll tell you what.
All right, looks like we have another caller on the line. Well, the first one for tonight. Who have we got on the line, please? Is that you, Dave, there?
Yeah, hi guys, it's Dave from Sydney. How are you?
Great. Oh, look, you're a regular caller on the show, aren't you? Good to have you on
Certainly
again.
am, yeah. No, I certainly am. So
We
I
might
know
make a feature of Dave.
yeah, no,
You have a
mate.
segment.
I certainly value your thoughts.
Okay.
Your words of wisdom, shall we say.
Fantastic. What's the stock that you've got for us tonight, and what's
Well,
your
this one's
question?
actually for my son. He's just bought into a company called HIO.
Okay.
He's happy to buy it long term, hold it long term, I should say. His entry was 33 cents, and yeah, long term, he's hoping for it to get to $1. So just to see what your thoughts are, a dollar or even higher, to be honest.
Is that,
yeah, happy to.
did he work that out, Dave?
What's that, mate?
Why did he pick $1? Is that just something that he'd like it to hit, or he had it worked out?
Oh, well, because it's long term, the fundamentals behind it. It's a junior iron ore producer. So, yeah, we're hoping it to be another FMG, basically.
Ah, okay, gotcha. So there's no... Okay, cool, all right.
So, yeah, he's young. He's only 25, so he's happy to hold it, long term.
Okay, Dave. Just look, one more question.
Yeah.
Did you advise him to get into this stock?
No, he does research, actually.
He's done the research himself.
He's done his own research. And, he's been in the market for a couple of years himself, and he picked this one himself.
That's so exciting, and thank you very much for calling into the show again, and we'll have a look at the stock for you.
Good on you guys, much appreciated. Thank you.
Bye. All right, Horsens Iron, another FMG. What do you think?
Not at the moment, but anyway, I mean, it's very volatile, which is what an FMG is, so I do like that. I mean, whether it goes to $1 or not, and it is a long-term hold, so as long as it's got good fundamentals, I don't have a problem with that so much, in terms of whether it's going to hit that this year or next year or in 5 years' time. It's a real guess, isn't it, on this one?
I guess from my perspective, with something that's so volatile like that and risky, what sort of percentage did it rise in 1 week? Can you tell me that?
Yeah, I can tell you that. I mean, it was up. I was looking at this because it was up near $1, way back in 2010. So about 12 years ago, it was up at 99 cents. So, it'd be interesting to see why it's done that. But obviously, in this month, it's gone up 71%. So, and obviously, his son's bought it in here at that 33 cents somewhere in the last month anyway. So he's captured a little bit of that profit.
Look, I can't help but look at history. I mean, he maybe he's doing this research fundamentally about the company, but you look at what it had done in the past over there on the left-hand side of the chart, and you can see, its potential to do the same sort of thing, whether it will go to the same height as that or not. But look at the length of the current bar. Now, what did it do after that big bar on the left-hand side? It just traded sideways for months after that.
You can have that bounce anyway.
Just here you can see there was this one really strong month, and then for many months it traded sideways, went up for one more month, and then it fell all that way.
Well, that was my concern too. It's like when you get such a big move up in such a short space of time, people get exhausted, and the people that were looking at it down at 20 cents are not going to buy it at 40 and 50 cents.
If anything, for me, if I was holding that share, for me personally, I would look at taking some money off the table with any rule I can. Yep. And then just allow the rest to run. But I'd probably take more than my capital, but that's just me.
That's just you. You're a little bit greedy. No, you're not. No, cool. But at the moment, hold it. I don't mind it. I just don't necessarily... It's going to be a bit of a rocky road. As long as you can handle the rocky road, then that's fine.
All right. Our next email we received is from Chris. When setting up a stop loss, how far below it do you set the limit price? Obviously, if it's too close or the same as the stop loss amount, you might miss out if the stock drops quickly below that limit. So if the stop loss is 10% below your buying price, how much below that would you recommend the selling price limit be? Thank you, Chris.
Good question. That's a ripper of a question, isn't it?
Very good.
Should I say to him, if I told you I'd have to kill you?
Yes.
Okay, no, I'm not going to say that.
You just did.
That's the stuff we talk about with our students all the time, isn't it, when we're talking to them? You know, and to me, is if you've got your exit price is $10, and so the trade below $10, to me your limit should be within 1% of that your exit price, pretty much. Generally, maybe even 0.5%. What are you thinking?
Yeah, because, I mean, normally when we talk to people, we tell them not to actually set those order entries like that. It would just be as soon as the stock trades through it, then you get out. Or you might be looking at how it closes for that day and then you get out the next day, something like that. But if you really want to set those orders into the market, then I think what Dale's saying is reasonable. But you just have to do what's really comfortable for you, because if you don't set a guaranteed stop loss, and a guaranteed stop loss you have to pay for, then you could be exposed to the market and then miss out on an exit because the stock gapped down the following day, or when it opened the next morning. So that's always the risk you take, and it depends on the volatility of the share. You have to be familiar with it. If it's a nice big stock, not so much of an issue, because usually stocks like BHP and Rio will gap a bit, but not too much that you can't get out at a price that you want. So I think that's really...
I can't remember last time I put a limit on a sell or a buy.
Yeah, okay.
I really don't do that because of the techniques that we actually use. I don't really do that, and I don't like setting, like if it, like those, sell at this and there's my limit and things like that. I tend to look at the market and then buy and sell at market all the time. It's not really because we're trading better stocks too, and it really depends where you set that stop is depending on where.
Yeah, that was an excellent question, wasn't it?
Yeah, it was an excellent question. So it's a little bit variable, but I just gave a general answer, and I think your answer was awesome.
Oh, thank you. Our next email is from Venkat. Hi Dale and Janine. I've been following your shows on YouTube for a while now and love the way you share your thoughts and analysis on ASX stocks. My query today is regarding YPB Group. I bought the stock at 0.3 cents in October-November 2021 with a view of holding it medium term. The current price is trending at 0.2 cents. I wish to listen to your views on the recent announcement regarding consolidation of this stock. Right, now, first point, basic mathematics suggests that post-consolidation at 25 to 1, the share price would be 5 cents and will have to rise significantly to 7.5 cents for it to match my current average cost price of 0.3 cents. So, should I go with the consolidation or sell it at a loss and move out? Based on your experience, this is point 2, what is the market trend of stocks that go through such consolidations? Thank you, Venkat. Really interesting question and well thought out. So what's your first response when you see a question like that, Dale? Look,
it's a little bit of speculation because you're not sure what it's going to do when it gets to that point anyway, but it's not a stock that I would even be in the first place. I just think
from the chart it's just so illiquid.
It's probably the worst stock I've seen in months and months actually on the show. So I wouldn't be in it anyway, but you're 25 to 1, you're going to have less shares.
So what you're saying basically by saying it's the worst stock is just because of the way that it trades.
It's just so speculative.
Yeah. Okay.
So you can speculate all you like on what might happen. That's what I'm sort of saying too. It's a speculative stock. It's a low cap stock.
High risk.
It's really high risk. And what happens when it does the 25 to 1? Because basically what it is they're saying for every 25 shares he holds, he gets 1, which means in theory you multiply your buy price by 25.
Yeah, look, I see it as a positive.
To your buy price.
The fact that they're doing the consolidation. They really need to, because nobody's going to look at these shares. Once they get down below sort of a few cents, who's going to be focusing on these?
So they get what they're wanting to do.
Institutions will look at them, will they?
Yeah, well, that's exactly what they're wanting them to do, isn't it? They're wanting the price to come up so more people will look at it, so it creates more liquidity on it, because it is a positive, I understand that, but it's still high risk. And I don't even know why people play in stocks like this. It's just high risk.
Yeah, so I mean, I guess from my perspective, if you'd bought it and you were sitting there, you must have bought it for a reason, and only having bought it recently. So why would you be looking to sell it right away?
Well, he's not, but he doesn't say he is, but it's about, looking at, it's got to do this to get to my average buy price, which it's, and if you're really confident in the fundamentals on this stock,
I tell you what, let's tell him something technically to help. So if the stock goes through I'm just going to pick, because it's not easy on the liquid stocks to get these, sort of work these out, but if the stock goes through this level, what's that, 5 cents? Now, that's based on the current unadjusted price, 0.5 cents. So adjust that up according to the adjustment of 25 to 1. Whatever that level is, the stock's got to get through that.
Yeah, but he's asking us what happens with stocks when they do this? What's their trend going to be like afterwards?
It
And the answer
usually
is we can't
improves.
guess.
It's a guess, but it usually does help the stock
It usually
price.
does help, yeah. Correct. But I wouldn't be banking on it on a stock like this anyway.
Okay.
Yeah.
All right, we've done that one.
Okay.
It is time that we get into our main topic for tonight. Now, Dale, I know you like ice cream. So if you were in an ice cream shop that had 100 flavours, do you think your decision would be quick and easy or long and hard? And do you think that after ordering that you might have been tempted to change your mind?
Seriously? 100 flavours of ice cream. It's like being in ice cream heaven and hell at the same time, really, isn't it? It's like, what do I pick if I pick this one and I don't get that one? And
How do you make a
it's
decision?
like I'd be there for an hour trying to pick, I want that one, I want this one. And then when I'd pick my ice cream, at the end of the day, I'd be going, oh, maybe I should have picked that one. Or somebody else has got one
I
to
don't
go.
have any trouble. I can always come back again. So
It's just ice cream, isn't it?
do you know that there are over 2,000 companies listed on the ASX? So you may think that finding the best stocks to trade on any day should be easy, but for some, it may be hard.
I think that for most traders, it's like me making a decision in the ice cream shop. It's just not easy, Janine.
Yeah, that is what I thought that you'd say. Without the right knowledge and awareness, it's really not easy, and you can quickly find yourself in the middle of a minefield of reports and free recommendations, all purporting to know the best stock for you to trade.
Yeah, so true. Now, the challenge for those who are new or inexperienced to the market is that there's a lot of BS circulating about the best stocks and the best way to select them, and worse, it's easy to be sucked in by those who BS the most.
Correct, and of course those who BS the most get more attention as they play into the emotions of those wishing to profit. So tonight we're going to fix this so our viewers don't get caught out, as we're going to share 3 steps to help you get on the right path to selecting the best stocks for you, as well as a few great companies that we have on the watch list.
We're also seeing so many people getting sucked into using apps on their phones to trade, and they seemingly present free information and allow you to buy at the touch of a button. Now, you don't ever have to turn on your brain on to buy a stock when you use those apps, but what could be easier, right, Janine?
That's right, I know. Look, I should say wrong, shouldn't I, to you?
Yeah, you should say wrong.
I just love saying that to you.
Wrong or right.
And while this may seem easy, easy is not necessarily in your best interest, and it comes at a price. Think about this for a minute. Maybe you enjoy the convenience and benefit in ordering your food online and at the touch of a button. If the food's bad, you've not lost much, but why would anyone allow online platforms or apps with clear vested interest and fancy marketing to convince them to treat the stock market the same? To me, that's insane, and it's also naive to think that they're operating to benefit us.
So true, Jane, so true. Now, maybe naive, which is crazy, but in the defence of those who are drawn into this, you don't know what you don't know, and if this is what has been heavily marketed to you, then you might just give it a try.
Sadly, we see many people are now relying on apps to help them find stocks, and what concerns me most is they'll get burned in years to come if they continue to use these apps blindly rather than gain the knowledge to be self-sufficient.
Yeah, we see that a lot.
Do you think these apps are bad, and do you think they're as bad as those black box software programs?
Oh, yeah, absolutely.
Yeah.
I mean, in the 90s, I just saw so many of them coming up, so yeah. But, you know, whilst the person buying has no real understanding of how the selection was made, and if something goes wrong, they have no knowledge to correct it and are totally dependent in the hands of others.
They really are in the dark without a chart. I really think that's the truth, isn't it?
That's cute. That's cute.
You're laughing at me. That wasn't
well, it
cute.
sort of rhymes, you know. You're starting to sound a bit like me, okay? Now, seriously. History shows the financial industry is happy to keep people in the dark and telling them what they wanted them to know, and that's why we started teaching people to trade. We also wanted to lift the bar on the standard of trading and make it available to everybody.
You must admit, it is smart. The more people are in the dark, the more those in the know have power over the masses, and indeed can make the herd run in whatever direction they want. Just think about what these apps could cause. It's mind-boggling.
Totally. Now, it's not just mind-boggling, it's super, super scary. Now, experienced traders know that finding the best stocks requires knowledge. Now, when you have it, you can find stocks every day to trade if you want to, but what many people don't appreciate is that you don't actually need to. Now, remember, trading more does not mean you make more, but it does mean the more money the brokers and the apps make. So what does everyone need to know so they can pick great stocks, Janine?
Let's have a look at that. The shorter the time frame that you trade, the more knowledge and skills you need. A medium to long-term investor needs a structured approach to select stocks, manage risk and run a portfolio.
Too true, too true. Now, essentially what you're saying here is you don't want to wait until the hits the fan to do something. So be proactive and learn. That's what you're saying.
Yep, I'm glad that you didn't say that. So the challenge for many is that experienced traders rarely share their best kept secrets to find and trade great stocks, and we do. We put in all this all at once in our courses for you. And we do it to suit different budgets and to get everyone started with some important steps for you to follow tonight.
Okay, Janine, that reminds me, you can teach a man to fish, or you can feed him for life by teaching him to fish. Now, in teaching traders, we're teaching them to fish.
Yeah, definitely. This leads us to the first step in selecting the best stocks.
Set your portfolio goal. Income, is it income and growth, income or growth and income? I can't even say that, Janine. For those new to the market, this is simply about whether you intend to trade for income, growth, or growth and income.
So if your priority is receiving dividend income over the longer term and someone else wants to generate a regular income trading stocks, your process for trading and criteria for stock selection and rules you use to trade will be quite different. And remember, fundamentals are much more important for medium to longer term. Step 2 is your time frame to trade. Now, is it short term, medium or long term? The shorter the time frame that you intend to trade, the more knowledge and skills and experience you require. When we say short term, we mean weeks or up to 3 months. You do not need to day trade. This is designed to make brokers rich, not you.
Well, think about it for the moment, about your current level of knowledge now on a scale of 1 to 10. How much knowledge do you have? As an example, if you're new to the market and have had no formal training, you will be 1 to 5 on a scale of 10, which means you should select out of the top 50 or top 20 stocks over medium to longer time frames. You will still require proper rules and to trade them and to run a portfolio, regardless of the time frame you want to trade. Now, it's really wise to start by learning on slower moving stocks over longer periods. And if you decide to trade faster time frames, you will be better prepared to transition to this. Now, this brings us to the next point.
Yes, and step 3, when selecting stocks to trade, you must consider direction. Learn how to get this right more and you increase your returns. Learn to read a price chart and you'll pick stocks that are more likely to go up.
Now, I'm going to show you why this is so critical, and a lot of traders do get this wrong. Now, on the screen right now is Z1P, which is a stock we've had so many people talk about over the last couple of years. And what we're seeing here is the stock moved up really, really strongly up through here, and you can see just really quickly that it moved up, hundreds of percents up through here, and then it fell away quite heavily. And we're seeing how it fell away, and a lot of people, I know we're getting calls, we're getting emails, it fell 50%, and then people were saying, can I buy Z1P, can I buy Z1P?
Well, they were saying, can I buy it before that?
They were selling it, yeah, correct.
They were trying to buy before that while it was continuing to fall, so they could have been trying to catch a falling knife.
So what happens here is the market's, it's moved up, come back down again and started to move up, and if we put that on there again, we can see from here to here, that was up over 40% to that high through there, and we saw a lot of people jumping in. Now what I'm going to do, this here we're talking about is April last year, and let's go on, I'm going to change this to bring up a month of data at the time. So if we put the next month on, and look at what happened in the next month. So people do this all the time because they think the direction is up, but it's not, it's down. Now what I'm going to show you here, I'm going to put on my rectangle little tool, and I'm going to go, this is a daily chart, and I'll go to a weekly chart. Now look at this.
So that's where they were.
That's where they were.
On the edge of a cliff.
On the edge of a cliff, but they didn't know it because the majority of people spend their life looking at daily charts and sometimes weekly, but they're buying cheap. So they saw this stock trading at around that $13 mark, and then it traded all the way down here to around $7 mark, and they're going, it's cheap. And because it had moved up for a few days, this is 1, 2, 3, 4, 5, 6, 7, 8 days, they bought. Let's go and add another month. And look at that, it's gone sideways. Still losing money. Then it goes up again, and through here we had more people saying, oh, it's going up now, especially when it gapped through here. How many people did we get saying, oh, look, let's look at Z1P. What do you think of Z1P? And look at that, it still keeps going sideways and down. And let's keep adding more. And it's still going sideways and down and adding more. So where is the bottom? And people still kept buying it, and now it's down at $5. And it still keeps going down, and it's going down even further.
Yeah, that would make you feel sick. Like
and if you bought in through here, you're down now at this point in time. Even if you bought somewhere in here, you're now down 64% on your money, because people hate getting out of a stock because they don't like losing the money. And so they're holding all the way through. Now let's just put it back onto I'll put it onto a weekly chart, and we'll just spread that out, and then we'll just bring on the rest of it. Look at this. It still keeps going down. So now we're up to date. So now the stock is down to $1.31, and anybody bought into that sort of area there would be, if I can get my
So that's why the rules and understanding direction are so important, because that would have stopped them from getting in.
And the thing is, every week we see people that buy stocks that they think are going up, but they're actually going down.
Yeah.
And we see that time and time again.
That's excellent. Now, you can see how someone selected the wrong stock at the wrong time, and this was very costly. For regular viewers, you'll know that these examples of this happen every week, as Dale said, when people enter too early thinking the stock's going up, and in reality it's going down and continues to do so. Now, let's get into some stocks that we've chosen for shorter term trading, and one that's more likely to rise over the medium term. We're going to talk about why we selected these stocks. All right, let's look at the charts. Now, you might be surprised, Dale, by me choosing Harvey Norman, but it's
Why would I be surprised at that?
Well,
you're a genius.
Oh, geez. It's in that consumer discretionary space, which is in the. And you asked me before, what's the direction of that sector likely to be in the coming quarter? But when I look at this stock, I just look for what could happen in the short term. Now, if you look at these monthly, you've got to look at what's happening into the direction short term at any time. Does the stock rise for a number of months? And short term for us is up to 3 months. So it could be a number of weeks and up to 3 months. And this stock has consistent periods of rising for that space of time, giving a nice little rise, lots of nice little trades in there. I'm looking at the monthly chart at the moment, but like Dale was talking about before, we're seeing this direction is pushing up. The overall direction is moving up. Now, of course, it's all good with the benefit of hindsight, but by having certain techniques and rules that you can apply to the chart, you're not eliminating the chance of getting caught in the downdraft, but you're actually at least putting the probability or justification at least that the stock could rise. The market can do anything from the time that you get into a stock. You can't control that. The only thing that you can control is when you buy and when you sell, and the sort of stocks that you decide to trade.
Yeah, there's two big mistakes that we see people make when they're looking at stocks to buy. One of them is they've seen a stock that has risen heavily, and they jump in thinking with FOMO.
Thinking they can get a short term. I don't even care about that, because as far as I'm concerned, I want something that does this consistently over time. Can I see short-term opportunities to get into a stock that will rise for maybe 2 or 3 months and give a decent return? It doesn't need to be a stellar return, although look at Harvey Norman, for example. Out of this low here in 2018, it rose 60%. Look what it did out of the COVID low. What rose well and truly above this high in 2016, which is a good achievement for the share. And we saw nice little rises off each of these lows. Even the one after the GFC, there was a really strong rise there. It rose better than a lot of stocks out of that GFC low. So, you know, I've got to judge the character of the stock first. That's really all we're saying, isn't it?
Absolutely. You need to know, and obviously we're looking here for more medium-term trades on this stock.
Now, the point we should make is that there are so many things to look at. You've got to have a list of things to look at to decide whether you're how to pick the best stocks. That's really the point. It's all about a process, which is why a structured approach is really important. But these are just some of the things, and people are probably surprised that we said what are the first things that they need to do to find the best stocks? Well, first of all, you've got to understand what you're doing and why you're doing it.
I know.
So that's why we talked about whether they're trading for growth, income and growth, and then looking at how you're going to select the best stocks to suit the time frame that
I think
you're
you need
trading.
to explain that a little bit. It's going back to your ice cream analogy. It's about focus, and because you don't need 2,000 stocks. In fact, you could make a absolute brilliant living on the top 50 stocks and really make your job easy, but people do want to focus on the breadth of stocks.
Yeah.
And, go for, and it's interesting how, as experts, we give out our hot tips in terms of how you should be trading and what you should be doing, and yet the vast majority ignore that. They do
so
the
we
opposite.
could tell them that, that Commonwealth Bank's good for trading over a certain time frame, and people will try to trade it intraday.
Yeah, intraday.
Why? Yeah.
They're mixed up. And I had an email from somebody, I think it was an email somebody sent through. It was like, I'm using this and this and this, but then I'm on a 4-hour chart, and it's like it was completely mixed up what they were doing, and we see that all the time as well. So we need to look at the other stock.
So yeah, we do need to go on to the other stock now. I was going to go to the weekly chart, but I just talked a bit too much there.
Well, I did.
That's not
I'll
out of the
take
question,
blame.
isn't it? That's not uncommon for me to do that, but thank you for offering
so
to take
this
the
is
blame.
the short-term
Should I
stock
fall
you're
over
talking
now?
about? Okay.
All right. Now, so this is the longer term one. So this
so that
is
one was
Woolies.
the short-term one.
So
Okay, this is
Harvey
the
Norman
long-term.
was the short term.
Okay.
Yep. Get with the program.
Well, I'm sorry. I apologise.
Thank you.
I'll just be quiet.
Okay,
I'll
lovely.
sit in the corner.
No, you don't need to do that. I want you to join in. So look, when we're looking at this stock, we're looking for at least a couple. So our medium to longer term is going to be, ideally, we're talking about, I did say medium term, but now I really want to talk medium to longer term. So medium term can be anything up to 18 months. I generally look at something between 6 and 18 months, but everybody has different rules on the time frame for that. If you're looking for longer term, then it's going to be 18 months and over. Now, all I need to do is know the personality and know whether this stock trends up over that sort of time
It's had a
frame.
history of it multiple times.
Because then I know that I'm more likely to get a return out of it over that time frame. Whereas we've had people ring into the show telling us they want to hold long term a stock that doesn't have history. They've got no idea what it's going to do. So
And it trades at
far
point
more
something, I think,
speculative. And those sort of stocks really are trading stocks. They're not ones to hold on for the long term.
Well, they're buying praise. They're not even that. They're not even trading stocks. Some of the stocks we see, they just buy it and they pray it's going to go up over the next 3 to 5 years. So to me, this thing's just a brilliant stock. CSL's another one that does this sort of stuff, and Cochlear's another one that does this sort of stuff that you just...
Cochlear's a bit more volatile, though, than say a Woolies. I think that, I prefer Coles at the moment, and I'm just watching Woolies to see what its direction is, because so far it's up in the short term.
Okay, so in summary, we've got to, firstly, they've got to work out what they want.
Yeah, and then
so it's growth, income, etc. So then they've got to narrow their focus down to the stocks they're going to look at.
Yep.
And then from looking at that, so when they find those stocks, so let's say top 20, top 50, then they're looking for ones that satisfy whether it's short term or medium term. Because I find most people don't understand trends. When I know when people start our beginner course, the cheap one, the trading mentor course, and they start talking about trends to me on their emails, and I go, no, you don't understand trends yet.
Yeah.
So, and it's so common, they think, oh, well, it's just higher highs. No, it's not. It's just lower lows. No, it's not. There's so much more to it. So I think people get mixed up in it. And yes, the trend is your friend, but you've got to trade with the trend. But as we showed with Z1P, most people are not doing that. They're doing exactly the opposite of what our experts are talking about. So that's it for our topic, unless you want to say anything else.
No. There's lots of stocks, and you could bring up stocks and call into the show and say to us, look, what do you think of this stock? Do you think it's good for the long term, medium term, short term? Anytime you like. So we'll give you another opportunity to do that soon.
Fantastic. Well, now before we get into our next email, hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine your most burning questions. Now it's time to get dialing. The number you need to dial is 0392909988. That's 0392909988. So get dialing now. I'll give you a copy of my book, because Dave, who's called in a few times, he's already got it, so he doesn't need it. So if you want to call in to get a copy of my book and ask us a great question, so please do that right now.
Great. And while we wait for you to call and to get answering questions, let's get into the next email, shall we?
Well, moving on, we have a question from Alex who says, "Hi Dale and Janine, a question. I've entered ORG at $6.50 recently after I waited for it to come back through $6.20 and showed continued strength. It looks like it's forming a nice trend with higher lows for the last 5 or so months and potentially next resistance level around $8. What are your thoughts on the trajectory of this current stock? Regards, Alex." I like the stock.
I know, so
really
do I.
do like this stock.
I mean, it's got huge strength under these lows here, and it's just risen up beautifully. If we look at the monthly chart first and have a look, it's in a really nice trend at the moment. And resistance, I think he's pretty spot on. There's some resistance up around this $8-9 mark that could be important for the stock, but so far it's still tracking nicely. So we like your stock choice. Now let's look at the shorter term time frame to see where you've come into the stock. So he's waited for the stock to pull back and then it's gone up. I think that was a really wise decision because sometimes when these pullbacks happen, you don't know where it's going to stop or if it's going to keep falling. And then he's marked his level there. Well, I've marked it for him, but he's obviously got a level that he's marked based on some understanding of the stock, which is great. So I like it. The only thing he hasn't mentioned is where he set his stop loss. So that's the really important thing that we look forward to hearing from you as well, just to make sure that you're protecting yourself in the trade. But really good question and great stock.
Well, he's picked a stock that's in an uptrend. He's picked a stock that can move when it moves. It's quite a steady move and it's had a history of steady moves. Long-term or medium-term type of stock, this one?
Look, I think it's probably a more medium-term stock at the moment anyway.
Okay, fantastic. I just wanted to add that in after our main topic for tonight, thinking, well, I do like this stock for sort of more medium-term anyway. Now, before we get into the next question, if you are listening to this YouTube live stream as a podcast, then we'd love to get your help, and that means giving us a 5-star rating and writing us a really nice review. You'd do that for us, wouldn't you? Now let's get into the next question, which is from Barry, who says, "Hi guys, I have only been watching your videos for a few days. I love them, very informative. I'm a longer term investor and wanted your view on BHP Woodside. I have some BHP and I'm trying to understand how the specie dividend will work. Currently BHP is around $51 a share and Woodside is about $33. If I own 1,000 BHP shares and I receive 1,000 Woodside shares on the 1st of July as a dividend using the current figures, my dividend is 64%. What am I missing here? Would I not want to buy another 1,000 or more of BHP shares before the close-off date just to receive the Woodside shares? My logic is that provided the combined price of BHP and Woodside on the 1st of July is greater than $56, then I'm up 10% on my investment without any upward movement of BHP. Thanks in advance, Barry." Long email, but...
Yeah, look, I can understand where he's coming from because they don't make these things really simple for people to understand.
Complex, aren't they?
But that's why you have to get the documentation out and have a really good look through that and read it really thoroughly first, and then just as you would do, we Google to see what is being talked about with any of these sort of corporate actions, and then. I think the market. The problem is that the market factors in the value of a lot of these things.
They do.
And that's what the little people don't realise. And I read a broker's report recently and the broker basically said, well, just expect that the share price is going to drop.
Yeah, but the price of BHP is going to drop because a big chunk of BHP is going over to Woodside. So there'll be two separate entities still, BHP and Woodside.
But the problem is that the share prices, Woodside's factored in a lot of this already, which is where the strong rise came from.
Yeah.
And the prices are going to rise and fall as they will. So it's more about what's happening on the chart, I think, than whether you just look at it from how many shares to buy and whether the share price is going to give him that dividend. I think if you don't have the share now, I just don't see the point in doing it.
Buying it because you are right. The market factors it all in. And I don't know whether Barry's seen our show from about 3 weeks ago when we talked about the BHP Woodside merger as our main topic anyway.
But I'd still do some research online and just see what other people are saying, but just be mindful of the potential for vested interests out there at the same time. And then you have to make a decision that you're comfortable with at the end of the day. Do you want to hold those extra shares?
Well, yeah, I know there's a lot of people talking about BHP and Woodside at the moment. So, but I think it's pretty it's a pretty important discussion to have, and it's a pretty important thing for you to read the documentation properly. And if you're in doubt, talk to your accountant. And
I
somebody
think
else
the
is gonna
shares are
help you
going
work
to
it
get
out.
more interesting after the corporate action's finished, actually.
Okay, I think we've had a caller on the line, I believe, and I'm going to struggle to say your name, and I do apologise. Hasnan, is that how I say your name?
Yes.
Did I get it right?
Yeah, you got it right. Yeah.
Yes. See, you should give me a gold star. Welcome to the show. Where you from, mate?
I'm from Sydney, Lidcombe area.
Fantastic, mate. Fantastic. Now you've got a question for us?
Yeah, I want to know more about bottom averaging.
Bottom averaging. What do you mean by bottom averaging?
Yeah, I would like to explain to you by this stock FMG. I bought it at $22.
Yep.
And I bought it $5,000 of FMG, and it went down to around 18. Then I bought $30,000 of FMG to bring my price down to almost $18.29.
Okay, yep.
Yeah. So my question to you is how many times of initial investment should one consider when doing bottom averaging?
Okay, thank you very much for the explanation of what you've been doing so we can answer you properly. And thanks for calling into the show. Let's answer his question.
That can be a dangerous game.
It is a dangerous game.
Because what happens if, now people wouldn't expect it, but what happens if Fortescue drops significantly from here?
Correct, and that's the thing is we teach people in our courses to buy more shares but at the right time. So I know somebody said to us the other week...
It's about buying them when you believe that the money is behind the share,
Correct.
not when the money's coming out of it.
Correct.
Yeah.
So just buying it, and it's called dollar cost averaging. It's not called bottom averaging. That's why I did ask the question, Hasnan, just about exactly what your meaning of it is, because I know sometimes when we talk to people, they say this something, and I go, well, what is your explanation? And what their explanation is completely not what it is. So it's what their perception is. But Janine, I don't dollar cost averaging. We're not really, we're not for it, especially on a falling stock to average your price down, because you never know what's going to happen with that stock price at the moment. So anything else you'd like to say on
Look,
it?
I agree. I think that if FMG... Look, the thing that could be positive, if FMG pulls back and finds support in the short term, it could take off.
It's about risk. It's your overall risk too.
But the problem is if it takes out this recent low that it formed, then it could be into a longer low, and we've got a gap down here. And if it does take out that low, then there's a chance it's coming back down to $13, $14.
All right, so you're not saying FMG is going to go down?
I'm not saying it's going down. I'm just looking at what could happen, the possibilities. If it rises, then it could take out the all-time high. That's possible.
Yeah, and continually adding to your position
just
is
let
only
it tell
increasing
you,
risk.
Back to that point on direction.
Yeah.
We just need to confirm the direction of it first, because it hasn't.
Okay, so until you confirm the direction, it's high risk.
It's not high risk, but if you've got a stop loss.
Come on,
But dollar cost averaging is high risk.
Dollar cost averaging is high risk. Okay, well, thanks for the call anyway. But our next email that we have is from Meg, who says, "Hi, Dale and Janine, I love your show on YouTube and thank you for your valuable information about the stock market. I'm planning to add Costa Group Holding at the moment as it is showing some positive signs. I've had this stock in my watch list since Janine talked about it in the past and planning to enter now with a stop loss in place. Could you please go through Costa Group chart and provide your thoughts on this? Thank you, Meg." Now, and remember to pick up the phone and give us a call, 9290 Janine and I are happy to chat to you. So,
right. Now, Costa Group. Now, we like Costa Group. It looks interesting
I've been
in the
talking
short
about
term.
this for years. So when did you talk about it?
We talked about it on the show not long ago. But, I mean, I think it had actually dropped down really strongly and was falling away. And so it was just about being patient, remember?
Yeah.
But now we're starting to see it move up again. It's still, for me, because of the volatility of the stock and what it's done, for me it's still a little bit too early.
It's too early
but
for me, yeah.
It depends on the rules that you've got to trade it, and that's the challenge. Look at the volume and what it's done as something that's interesting about it. We've had that spike volume at the bottom. Something strange was going on here. It's like that was being sold off, so they drove the price up initially and then down again. So with that huge volume there. So someone was trying to change out of the stock, and then someone else was getting back into it in a big way. But I would say, look, there's no hurry. When stocks take off strongly off the bottom, it doesn't matter how far the stock has come off that bottom. What matters is to be able to confirm that that's definitely, with a high probability is going up. So you wanting to be able to tick boxes for that. And for me, because I'm conservative, I just don't see that that's ticked the boxes yet.
I mean, even looking at your volume, the big spike at the bottom, the volume since then is not really super supporting that big move up at the moment too. So you only need, I think it's going to drop away in the next few weeks anyway. But people often get into them on FOMO thinking they're going out, and that's what we talked about a bit earlier. So
yeah, I mean, if this is setting up for a long-term rise, then you've got plenty of opportunities to trade it.
Yeah, and there'll be a better spot to buy it, I think. Much better spot. So just be patient, I think, Meg, that's all it is.
Our next email's from Andrew. Hello, Janine and Dale. I bought into Select Harvest last week after it looks to me to have broken a short-term downtrend and bounced off long-term support. I'd be interested to hear your thoughts for a medium to long-term. Thanks, Andrew. Okay, great choice of stock there, Select Harvest. But a short-term trading stock, it's really good stock. But for more medium-term, probably not.
No.
Given the pattern that we've seen over the last, probably
Well, do we want to use,
8 years?
we'll show him the chart of it? Do we want to do that? Is that okay? Can we have a look at that? Look at this.
Yeah. So historically, it trended beautifully.
Yeah.
You could get some really long runs on this share when it got going. But more recently, over the last few years, it's actually really struggled. So, that's why sometimes you might think that a stock is good for medium term, and then all of a sudden it turns into a short-term trading stock. So you have to continue to review the stock and decide on where you see it, really.
Well, let's go back to the weekly chart, because obviously he's bought into it recently, so we don't know what recently means, but this is breaking what we talked about in our main topic, isn't it? It hasn't shown us direction first.
Not really, no.
So it hasn't told us it's going up. We've had a couple of weeks up, but that's not suggesting it is moving up. So, and I'm not saying it's going to go down, and I know you're not saying it is, but there's possibilities. I mean, look at the weakness. It opened here. This is only 2 days data, Mondays and Tuesdays, but it opened here, pushed up, pushed down, and it's closed there. So the next move down will tell us whether this is the low or we're still waiting for the low to happen.
Yeah, I agree.
And so, Andrew, I think you're way, way, way too early on that, and this is what we're talking about in our main topic, is it's so easy to get into a stock thinking it's going up, and it's not. Now, you may have done all the fundamentals on it, which is great, but right now it's just a little bit too early.
So do you think I scared everybody off with telling them to call in and talk about their stock and whether we think it's for short term or medium term or long term?
I don't know, you're not the scary one, I am. I'm the one that they go, don't tell Dale, or don't get Dale to answer that one, because I'm a bit blunt.
No, they
so
don't.
You're the lovely one. You're the nice one.
Oh, thank you for that.
So I'm the mother, and no, you're the mother, and I'm the
yin and the yang. Is that it?
Well, I think I'm the cranky grandfather or something like that, isn't it?
You're the funny one.
Cool. All right, we better get on to our next email, which is from somebody called Palermo. So welcome to the show. Who says, "Hi, Janine and Dale. Thank you for a great show. To be fair, the only investment show I listen to rigorously and follow. Please help me with this ETF in my long-term portfolio. It's called Robo. I purchased it at $84 in 2021, earlier in the year. This ETF is now on a downward trend. Initially, I thought the market is just down. It will make a turnaround, but I'm seeing no such turnaround. It's one of my long-term holds, so I'm wondering, do I just ride this wave with it, or get out and cut my losses and move it into my other ETFs? Thanks, Palermo." Good question.
This is a really interesting chart to look at. Right?
Correct.
Thanks so much for writing in about this, because this will actually have done people who are technical analysts, it'll have done their heads in a little bit looking at the monthly chart and thinking about where it was likely to trade to, and then all of a sudden it reverses and falls away. But what it does is it actually tells you when to get out.
Yeah,
so
it does.
A stock will constantly, so you've got all of this support, these lows under here, but as soon as that's broken and the trend continues down, remember we talked about direction, so if the direction's all of a sudden continuing down, that's a high risk, big warning sign that other people are getting out at the rate of knots, so why should you be in there?
Well, that's true too, and it's also, this one also proves that no ETF is a buy and hold.
Exactly, that's what you've been saying for a long time.
Yeah, and whilst I love that he's gone into one that's in robotics because it's a specialist area, because you know that I hate index ETFs, they're just, why would you have them? ETFs like rules. But you still need rules on those ones as well, index ETFs, because I can guarantee you when we have the next big meltdown, and probably mid-decade to the end of this decade, there's going to be the S is going to hit the fan with ETFs. It will hit the fan. I know that. I'm so confident in that. But this one, great ETF, great choice, but you need an exit strategy.
Well, we saw the ETF of the tech sector ETFs get absolutely
they get slammed.
hammered.
So don't be fooled because it's an ETF that it's just going to keep going up. That just does not happen. You treat them exactly as you would as BHP or a Rio or any single other stock on the marketplace. And people say, yeah, but I got more diversification with the ETF. No, that's CRAP. You don't. It is a stock. Treat it like a stock, and that's really what I'm suggesting.
So look, I mean, if you were in it now, I mean, if you'd bought this ETF,
I would have been out ages ago.
Yep, but that's okay. But if
I'm still in it now,
say
you'd be
relative gave you the
across
shares.
the back of the head.
No.
Sorry.
Settle.
Okay.
Say you were
Breathe.
in this ETF, breathe.
Yep.
All right, and you're watching the share price do this.
Yep.
Given it had fallen so far already, would you at least wait to see if it found support, and then, if you were in it already, if someone gave you the shares?
Well, it's flip a coin now, isn't it, really? It's like, do I wait and hope, but if it goes down further? But I would absolutely 100% have a line in the sand that if it went below that, I'm out.
Okay.
I'd absolutely have that. And I would manage, if it started to go up, I'd manage my exit onto it. But then that's with my knowledge.
Yeah.
You know, with somebody, it's like I've said numerous times, it's better to pull the Band-Aid off fast. So this one should have been sold a few months back at least.
Look, I mean, if it comes back, it may find support. This is why I'm raising it.
I think he's fantastic. I love that he's chosen this stock.
It's right at a really important natural level there.
He's given it a go, and I love that.
Yeah, that's good. Yeah, and look, I've got your silly trend arrow thing there.
Yeah.
Now, I don't know if we can get oh, jeez, I hate these things. It's crazy. It's got a mind of its own.
I think it's a user error.
Yeah, I think it is too. But look, it seems like that you might not be able to get a trend line in there. I don't know. It depends. You have to check it to see if it's valid for me later.
Okay,
after the show.
Fantastic. So again, love what he's tried to do, but his process needs a bit of a work, needs to put a stop loss on it. So we're not going to tell you to cut your losses, basically, but I'd definitely put a line in the sand, please, and make sure you'll, know where you're going to exit. And if it does start to move up, stay with it and keep moving your stop underneath it. Now we've got to read out an email, Janine. So do you want to read the email there? Or do you want me to do it for you? Yeah?
Yep, I'll do it. It's fine. You have to put your glasses on.
I've got to put my glasses on to read it.
Now, I like your show and how you are sharing your knowledge. Now, this email is from Derek.
Yep.
With us, amateur traders. My question is about lithium boron developer in US desert. Now, the code is ASN, Anson Resources, a nice little miner. I bought most of the shares at the beginning of 2021 for long holding in my high conviction portfolio. Currently, my profit is about 130%. Normally, my strategy for speculative and hard growing is to sell half when profit reaches 100% and de-risk the remaining holding if I can see further growth of the stock. In this case, I hesitate on normal execution because lithium price is predicted to continue growing for the next 18 months and ASN is relatively cheap. Market cap, he's talking about comparing to its peers at similar stage of development. Please tell me what you think of the chart. Okay, so that's from Derek.
Okay.
So looking at the chart there, it's a hell of a ride.
It is a bit of a bumpy ride, isn't it? It's really big, wild swings on this one, isn't it?
Yep. Look, I mean, it's anybody's guess, given it's not trending nicely. It's just terrible in terms of the fact that it rises and then almost wipes out the prior swing that's hugely speculative. Like he did say, it was a speculative share. For this stock, it needs to get back above around 18 cents. Once it gets back through that 18 cent mark, it should continue to rise, but, it could just repeat the same thing it's done previously.
Yeah, absolutely. It could exactly repeat what it's done previously. I mean, you can see here, for him to be up 100%, he probably would have been buying it down somewhere around here into last year. But
and that's the weekly chart you're looking at.
And that's the weekly chart I'm looking at. So it's huge swings in price. So how do you exit a stock like this, or how do you enter a stock like this on proper rules? And it would take a lot of work to do that.
A lot of testing,
A lot of testing and a lot of work on this sort of stock. So right now, should he take his capital off the table?
I think that's a decision he should make because he's obviously got some sort of idea of a strategy, but I'd just be a bit concerned that he's got no downside risk protection, but then he hasn't really said that. So all I can really say is that based on what I can see now is if the stock holds where it is right now, around that 14 15-cent mark and then it continues to go back up, then it could just, go up quite strongly. But its history doesn't tell you, give you a lot of confidence, does it?
No, it doesn't give me a lot of confidence, and this is the thing. It's like, it's. I mean, more recent history is a little bit more like a heart monitor, isn't it? So,
yeah.
I mean, it has been up around that odd 30-odd cents, and this is what people see. They go, wow, it's done all that. If it gets back up to that, I'll make a lot of money. So, he's made a lot of money, and I think that's great. And I think, right now, if he's worried about a little bit, just take your capital off the table. That's pretty much what I think he should be absolutely doing. But look, I think you've done great on it, but I'm not sure what rules you're using to buy and sell it, but just make sure you've got a stop loss on that, and as I said, maybe take some profits off the table or take your capital out at least. All right, well, that's our thought on, what's the stock called?
Stock was Anson Resources. We haven't had that one on the show.
So that's our thought on Anson Resources. Now, if you've enjoyed tonight's show, then please give us a really big thumbs up on YouTube, and that means click the like button also underneath our video to let Janine and myself know that you've really enjoyed tonight's show.
If you called into the show and you missed out on us answering your question, then watch our show next week, Tuesday, 7 to 8 p.m, as we'd love to chat with you. If you're not able to watch live, you can also email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember, include Wealth Within live in the subject line.
Also, we would really appreciate your support for what we share each and every week. You can show your support by subscribing to our channel. So if you have not done so yet, hit that subscribe button now. Give us a big thumbs up.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thanks for joining us. We hope you have a fantastic week. For now, goodbye, good luck, and good trading.
Bye for now.